This week, the AI memory trade went fully public. SK Hynix's record $26.5 billion Nasdaq debut capped a choppy, chip-driven week. And it's the story everything else orbits. The S&P and Nasdaq ground higher, but the Dow slipped and the 10-year yield crept up. Welcome back to Wall Street Holic, and it's time to do a recap of market-moving events from this week. Our mood index reads 5.6 out of 10. Risk on, but capped. Let's get into why. Four forces drove the tape. 1. The IPO of the year. SK Hynix popped 14%, the largest foreign US listing ever. 2. A hawkish Fed hum, with markets pricing 64% odds of a September hike. 3. Oil's risk premium as US-Iran strikes pushed Brent towards $76. And 4. A narrow, tech-led tape. Meta and the chips carried everything while the Dow fell. Remember that last one? It's the week's real theme. Here's the cross-asset scoreboard. Green is risk on, red is risk off. US stocks mostly higher, but the Dow red and the Russell flat. Japan led the globals, China lagged. The whole Treasury curve rose about 7 basis points. Oil did the heavy lifting, Brent up 5%, while gold slipped nearly 2%. And crypto quietly gained, both Bitcoin and Ether up around 3%. One table, the whole week's mood. On the macro calendar, the FOMC June minutes read, hawkish jobless claims came in firm, but existing home sales missed, a quiet crack in the real economy. Then Friday, new Fed chair, Warsh launched 5 policy review task forces. The takeaway, this is a hiking bias, not a cutting one. The minutes flagged inflation tied to AI demand and the oil spike, and markets now see a 64% chance of a hike by September. Next decision, July 29th. Into bonds. Every point on the Treasury curve shifted higher this week. The headline, the 10-year rose 7 basis points to 4.56%, its highest in about 2 months on those oil-fed inflation fears. The 2-year to 10-year slope held steady and modestly positive, so no recession flag. But the message is clear. With 64% odds of a September hike, the bond market is bracing for tighter policy, and that becomes the ceiling on stocks. Oil was the week's engine. Brent up 5% as Middle East strikes revived a supply risk premium. WTI up 3%. Gold went the other way, down nearly 2% as real yields rose, though it's still up 21% on the year. The dollar just steadied. And in the crypto corner, a quiet show of resilience. Bitcoin near 64,000, Ether near 1,800, both up around 3%, lifted by ETF inflows and Clarity Act optimism. If you take one picture from this week, make it this. Ranked by weekly move, Brent crude tops the board, followed by the crypto and the tech-heavy indices, all green. At the bottom, the Dow in the red and gold, the biggest loser. The takeaway, oil led, gold lagged, and stocks split. It's a risk appetite tug of war. Geopolitics powering oil, AI enthusiasm lifting the Nasdaq over the Dow. Narrow leadership, loud macro. If you like what you see, don't forget to like, share, and subscribe. It helps us continue to make these types of videos and help novice to seasoned investors understand the markets. The movers. On the winner's side, SK Hynix's blockbuster debut, Meta up 15% on a bullish AI compute report, equipment share up 17% on a raised outlook, and Micron still up around 200% this year. On the loser's side, it's the same trade in reverse. Intel and Marvel left behind in the chip whipsaw, IBM a Dow drag, defensive United health lagging, and space stocks pressured by uncertainty around SpaceX's listing path. Around the world, the US we've covered, tech up, Dow down, but Asia was the drama. Japan's Nikkei rose on tech strength, while Korea's Kospi plunged about 8% in a single day on chip fears before snapping back Friday. Europe was quiet, roughly flat, with miners and tech leading, and China lagged the whole complex. Shanghai and Hong Kong both lower as tech and industrials dragged. Now the quiet stuff that matters. Breadth is thinning, gains lean on a few AI names. A hiking bias is back at 64% odds. Warsh is reshaping the Fed with 5 new task forces. The IPO window cracked open, though it may siphon flows from names like Micron. Housing keeps cooling as higher yields bite. And crypto held firm straight through a geopolitical flare-up. Risk appetite showing up right where you'd least expect it. 3 takeaways. 1. AI memory is the market. A single theme now steering indices, IPOs, and leadership. It giveth breadth and it taketh away. 2. The Fed is the ceiling. Higher for longer yields cap how far this rally runs. 3. Enjoy it, but hedge. The tape is green, but thin breadth plus Tuesday's CPI and bank earnings make it fragile. Mood index, 5.6. The verdict, risk on, capped. Grind higher, stay hedged. The week ahead. Monday's an earnings warm-up, but Tuesday the 14th is the marquee day. June CPI at 8:30 Eastern, then the big banks, JP Morgan, Bank of America, Goldman, and Citi. Wednesday brings more banks, Thursday it's Netflix, and July 29th, the Fed decision looms. 2 setups. A hot CPI validates the hike trade and hits long-duration tech. A soft one reopens the door to 8,000 on the S&P, and bank earnings test whether strength is broadening beyond AI. And that's your week on Wall Street. To recap, AI memory ran the tape, the Fed set the ceiling, and CPI plus bank earnings are next. If this helped, subscribe. This is a subscriber-led channel, and the coverage you ask for genuinely gets made. We cut the hype and run the same fact-based process every week, honest about our confidence instead of faking certainty. This is not investment advice, it's purely for educational and entertainment purposes, as always. We'll see you next Saturday on the recap show. Stay sharp.
This video is for entertainment only, reflects the creator's opinions, may include stocks they own, and is not financial advice.